Hello and welcome to another update video about Polkadot. We had so far two bullish scenarios available on the Polkadot chart. One is now invalidated. Well, it's not. Yeah, it is invalidated, but we could still make it work another way. So we are still here between basically two possibilities on the chart in terms of a bullish scenario, and we can remain bullish really. Because we can make it work from the Elliott Wave count. You just also to understand my thought process. It's not that I want the prices to go up while I'm showing you bullish scenarios. If I just showed you bearish scenarios, it wouldn't be, in my opinion, it's not justified because there is no evidence in the chart yet that we are going to break lower. I give you percentages so that you have a good understanding of my own view, how I see the market. But a lot of people just shouting and screaming bearish scenarios basically because we're in a bear market, because it gives you more views. I can only show you what the Elliott waves are telling me, yeah, and everything else is just speculation. And of course, the people who are shouting bear market, and lower lows could be right, absolutely. I give a bearish scenario at the moment 40%, but it's not guaranteed. Yeah, it's not guaranteed, and these are the same people who were still bullish until we dropped below 30k. So always keep that in mind. It's best just to follow the waves. Yeah, especially in an uncertain environment here. I give you key levels, and if we drop below these key levels, we're probably going to drop much more because one scenario gets invalidated. It is what it is. The market is volatile and we're still in an uncertain environment because Polkadot as well as other cryptos have not completed yet a clean 5-wave impulse. And that is what we need to see for confirmation. Okay, so what are the two bullish scenarios that are still possible here on the Polkadot chart? The first one is basically this one here. We can see at the moment this here as a leading diagonal. Here a wave 1, 2, 3, 4, and 5. That is possible to see just that as a leading diagonal. We then came down in a wave A, we moved up in a wave B, an overshooting wave B, and we came down in a wave C. This is possible, but having a leading diagonal plus an expanded flat in the wave 2, unlikely. I don't think this is the one that we are seeing here. I am currently leaning towards a different scenario based on this stronger sell-off that we saw, and also because we dropped below this target range here. I am more of the view that we have all of this. Yeah, so let me take this out. We can see all of this now as a leading diagonal. Still assuming at the moment, carefully bullish, carefully assuming that the low was in here at 598, but it's not guaranteed, of course not. And I always try to communicate that. So if we assume the low was in here, how can we make that work from an Elliott wave point of view? So the possibility is definitely there. We can count what is currently, or what moved up here. We can count that as a W, X, Y. That would be the first wave of a leading diagonal. So let me just show you that. Basically, the WXY was the wave 1. If you're asking yourself why, how on earth, why is a wave 1 a 3-wave move? In a leading diagonal, you can have a so-called 3-3-3 wave pattern. So each of these waves of a leading diagonal has 3 waves. So I'm going to show you that as well. I'll show you the sub-wave counts as well. I think it is like this, yeah. So we've got a 5-wave move, overlaps are fine, and this is an absolute valid wave count here. That would allow us to drop lower, also in the current scenario, without invalidating here anything, yeah. So a wave 1, a wave 2, a wave 3, a wave 4, a wave 5, completing a leading diagonal here. Or what many would call an ascending wedge, yeah. This can be a bearish pattern. It can also just be a leading diagonal at the beginning of an uptrend. Again, it's happening. Again, not a very frequent pattern. I would also like to see just a classical impulsive wave structure, but we can make it work like that. We then have within this wave 3, we also have a WXY. So also here you can see there's a W, then we had the wave X and the wave Y. And then that last wave was an A, B, C. And those moves down were 3 wave moves anyway. So that means this was a wave 1, this a wave 2. This is how we can currently see it. And then in this move down, that's a corrective wave in a wave 2. In my opinion, a wave A here, a wave B here, and the wave C down now. And now it's important to understand where could we stop. Now, just in terms of key support levels, what we can do here, let's take a look at the, take those out. Let's take a look at the VP-VR. Let's take a look at volume profiles. You can see that we've just hit one of these key volume spikes here. So this is a difficult area to fall through. So as long as we're holding above 670 from a structural point of view, we should be okay and we have a good chance to reverse. A drop below 670 wouldn't be good, as you can see here. So if we lose the 670 level, there's a really good chance we come down to $6 again, and we'll also retest that and possibly lose that. That would then explain to us that all of this was just a corrective wave. So as we are getting closer to this level and challenging it, it gets tougher for the bullish scenario. So this current retracement down is really a key stress test for the bullish scenarios. At the moment, so this is the key area, just a key cluster of support, which is good news. So however, if we go below, what was it, 670, then it won't be anymore really positive. I mean, even at the moment it's not positive, but that will challenge the bullish scenario more. In the wave C is obviously a 5-wave move. At the moment, what can we do? We can count a 1, a 2, a 3, let me think. I mean, this could still be the 3, well, the 3 done. This could be still the 4 in some kind of a triangle pattern, where we would then come down once more in a 5. So that would be the last wave down in a wave C of the wave 2. Best indication that this move down is over? Difficult. Best indication is normally a move above the wave 4 high. It's basically the first indication that we can get here. This current spike is at 770, so if we go above 770, but then at 775 we've got that 50-day moving average here. So that will be probably the level. If we get back above that and hold it, so a substantial breakout above it, that would be a good indication that the low is already in here and that we have completed the wave 2 correction. Best indication after that would be a break above the wave 2 high at 860, and then 915 is the wave B high. So if this is really here a wave 2 down, we could be close to the end. It will be interesting. I'll keep you updated about that. And after the wave 2 is done, we should then expect a wave 3. But we first need to see how low the wave 2 goes, and we need to see if we are still in the bullish scenario. If we take a look at key Fibonacci retracement levels for this wave 2, we are currently hovering above the 61.8% Fib level, and the next key level is the 78.6% Fib level that is at 676, very close to the lower support of those volume profiles that I showed you. So that's really a key level, 676. Okay, and that's my update about Polkadot at the moment. So these are the key support levels. I gave you all the key levels, and if we drop below that volume profile level, then it will be really tough for the bullish scenario. Okay, and that's my update about Polkadot. Hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then check out the channel membership. Thanks a lot for watching. Bye bye.